Welcome back to another insightful session with Informed Investor. Today, we'll talk about a metal that holds great prominence in India. The love affair with this metal goes beyond the bling. If you're still wondering what I'm talking about, it is gold. Gold in India isn't just a metal or an investment avenue, but also an auspicious symbol of wealth and prosperity. The love for gold by Indians is a tale that spans centuries. But did you know India stands as the world's second largest consumer of gold? Apart from the traditional method of buying physical gold, there are several other options that exist. In this video, we will talk about this metal that shines brighter than ever and the recent surge that gold has witnessed, making it hit all-time highs. We will ponder upon the different types of investing in gold and the tax implications of such investments. Lastly, we will compare the returns gold has delivered in comparison to other asset classes so far in the year 2023. Let's begin. You're watching Informed Investor, an initiative by Research and Ranking. Gold has been deeply ingrained in the Indian society for thousands of years and holds a special place in the culture and traditions in India, symbolizing wealth, luxury, and lasting value. As we Indians are known to be strong to our traditions, so do our habits of buying gold. And interestingly, the demand for gold in India peaks during the festive season of September to November with a flurry of festivals like Ganesh Chaturthi, Navratri, Dussehra, Dhanteras, and lastly, the grand festival of Diwali. What's more interesting is that this festive season also overlaps with the wedding season in India, of which the most key ingredient is buying gold, driving the demand in India for gold all the more. Before we get into why gold prices are surging, let's share an interesting fact. According to the World Gold Council, Indian households are estimated to have more gold than the reserve held by central banks of major economies. Indian households or people in India have about 25,000 tons or 3 times that of the US, which translates into a staggering $1.5 trillion or equivalent to more than 40% of our GDP. In comparison, the US government has the largest gold reserves of 8,133 tons, followed by Germany at 3,355 tons. In context, India places itself in the top 10 with the gold reserves of 800 tons. While people in India have bought gold for various reasons, usually culturally, religiously, or amid the wedding season, it has found appeal as an investment option as well. Gold has been the best store of value for the long term, as unlike a few assets, it maintains its value without depreciation throughout the holding period. Moreover, gold investments safeguard savings from currency depreciation, acting as a shield against inflation. Gold is easily convertible to cash and widely recognized by jewelry dealers worldwide. It can be used as a collateral for loans, making it a highly liquid asset. Traditional investors prefer physical gold due to its secure nature. Additionally, gold tends to appreciate over time, offering consistent returns in the long run. Specific gold investments like non-equity products such as gold funds provide reduced taxation or tax exemptions, including advantages in the long-term capital gains. As an asset class, gold has a low or negative correlation with other asset classes. Hence, it is helpful in diversifying or hedging your investment portfolio against market volatility. Lastly, when you buy stocks or invest in mutual funds, you need some knowledge of the market and economy to make the right decision. With gold, no such knowledge is needed. It is simple and straightforward, making it easy to invest in for all kinds of investors. So why are gold prices rising? Gold prices have witnessed a meteoric rise in the last few weeks and are now shining brighter, hitting all-time highs. Prices have reached around the 64,000 levels on the back of various global and domestic factors. Let's talk about the global factors. The Federal Reserve aggressively hiked interest rates in 2022 and 23, which dampened the demand for gold as higher interest rates made other investments like US Treasuries attractive, drawing investors. However, in the recent months, the decrease in inflation and pause in policy rates and expectations of rate cuts in the coming 2024 have boosted gold's appeal. Gold tends to perform well during periods of economic and geopolitical uncertainty due to its status as a reliable store of value. And with the ongoing Israel-Hamas conflict, it has further provided support to gold. And that's one of the reasons why gold is considered as a safe haven, which means when there is any economic uncertainty, gold seems as a safe investment with investors seeking refuge in gold stability. The dollar index, which tracks the value of US dollar against a basket of 6 major currencies, has declined around the 100 levels, leading to the decline in the major currency. And since gold is dollar denominated, a weaker dollar makes gold cheaper for international buyers, increasing gold global demand and pushing up prices. One supporting factor is the accumulation of gold by central banks as they try to pivot away from over concentration in the US dollar, thereby also diversifying the reserves. And according to the World Gold Council, central banks have been consistently buying gold above the January to September monthly average level of 34 tons. In the list of countries accumulating gold, People's Bank of China remained the largest purchaser with over 200 tons in addition. In context, India remained at the 5th spot with a decent amount of accumulation. Now let's jump to India-specific reasons. The period of September to December marks the peak festive season and wedding season in India, and the key element of all of this is gold, as it marks not only an investment but an auspicious symbol of wealth and prosperity. To put these things into perspective, the Confederation of All India Traders expects India to witness about 38 lakh marriages with a total expenditure of 4.7 lakh crore, of which a significant amount can be attributed to gold. And interestingly, weddings and bridal jewelry generate approximately 50% of the annual gold demand in India, showing the prominence and severe demand in India. Gold holds a separate appeal in India as it fulfills a twin motive, adornment and investment. Gold has been the go-to investment for Indians as it provides relative stability and attracts Indian investors seeking to protect their wealth. While earlier people had limited options for investing in gold, now there are several innovative products to which have an exposure to gold. Don't worry, we will discuss this later in detail. All these factors have created a perfect storm for gold prices. The global environment of uncertainty and the local factors of festive demand and investment appeal have led to a surge in gold buying, pushing prices to new highs. Now let's move to a more interesting concept and explore the different types of investing that can be made in gold. First up, and the most traditional method of investing in gold is in the form of jewelry or gold coins and bars. While gold jewelry is certainly an investment, it also comes with cons such as 10% making charges over and above the gold you purchase, followed by 3% GST. Then comes the inconvenience of storage, as it needs to be kept in a bank locker or safely in the locker of your house. And lastly, the purity of gold, which is another major concern. Another alternative to physical gold in the form of jewelry is gold bars and coins, which is far better as there is no making charges. The purity of gold is guaranteed and the quality is assured by Hallmark. The only drawback are the payment of 3% GST along with the inconvenience of storage. To solve all these problems arise digital gold. As the name suggests, it is a virtual method of buying and investing in gold without physically holding the gold. Several platforms such as mobile e-wallets like Paytm, broking firms and financial institutions offer investments in digital gold. The pros are that the purity is guaranteed, there are no storage concerns, it offers liquidity, and lastly, investments can be made starting from rupee 1 onwards. The cons are the payment of 3% GST along with the platform commission since it's bought through an intermediary. Next up is ETFs or exchange traded funds, which track the domestic prices of physical gold. These are backed by physical gold of high purity and are listed and traded on the exchanges. These investments come with minimal commission or brokerage fees of 0.5 to 1%, and again, the purity is guaranteed and it offers liquidity as it is listed on the exchange. Next up, I'm sure you've heard about mutual funds that invest in equity, debt, or a combination of both. But did you know there are also gold mutual funds, that is a category of mutual funds that involve direct or indirect investments in gold. As the gold rates rises, so do these mutual funds as the underlying asset is gold. The cost of these investments range between 0.6 to 1%, which is the expense ratio, a cost that the mutual fund charges for the maintenance of the fund. Lastly, sovereign gold bonds or SGBs are government securities issued by the RBI on behalf of the Government of India and serve one of the best substitutes for physical gold. Since it is backed by the government, SGBs are considered safe and reliable. The best part about this is that they entail a fixed interest rate of 2.5% interest per annum apart from the appreciation of gold prices during the holding period. It also resolves the hassle of storage charges along with no additional charges or GST. However, these SGBs have a lock-in period of 8 years, but investors can exit after 5 years from the date of issue. Interestingly, if held for the entire period, it can help investors avail tax benefits. And recently, the government launched the third series of sovereign gold bonds. It is open for subscription from December 18th to December 2022 of this year. Now that we've understood the different types of investment, let's look at the tax implications. According to the provisions of the Income Tax Act, gold is considered a capital asset, and when you sell it, it becomes subject to capital gain tax. Capital assets in general are taxed according to the holding period. So in context, if you buy gold and sell it within 36 months or 3 years, it is considered as short-term capital gains. If gold investments are sold after a period of 36 months or 3 years, it is considered as a long-term capital gain tax. Coming to the taxation part, LTCG or long-term capital gains are taxed at 20% plus 4% cess, making the effective rate 20.8% with indexation benefit. Indexation allows you to adjust the investment's purchase price after accounting for inflation, effectively reducing the tax outgo. While on the other hand, gold investments sold within 36 months are added to one's taxable income and are taxed according to the applicable income tax slab. For SGBs, the taxation is a little different. The interest element received from SGBs is entirely taxable as per the tax slab. If held until maturity, which is 8 years, the capital gains are completely exempt from taxation, whereas if it is sold before the maturity period of 8 years, it will be taxable as per the above definitions of short-term and long-term capital gains. Now coming to our last segment, which is where we will look at how gold has performed with other asset classes so far in the year 2023. As you can see, Bitcoin stands far ahead in the pack with a staggering 166% returns so far. Small caps, which represent smaller companies in India with a market cap of less than 5,000 crores, came in at the second spot with 42.5% returns. Mid cap came in closely at around 40%. US stocks, or rather the S&P 500, delivered 23% returns, while large cap stocks representing established companies in India have provided returns of 15.62%, indicating a more cautious but steady performance. Taking the sixth spot is gold, with a year-to-date return of around 11%, showing its prominence as a safe haven asset and shining during times of uncertainty. Towards the bottom of the pack are GSECs, which are government securities, which are considered low-risk investments, have seen returns of 7.62%, followed by corporate bonds at 7.17%. The least performing asset class was real estate, which saw an average return of 4.3% return so far in the year of 2023. In conclusion, it is important to note that past performance is not necessarily indicative of the future results. The investment landscape can change rapidly, and what worked in 2023 may not work in the future. And that's where diversification comes in, the financial equivalent of not putting all your eggs in one basket. By spreading your wealth across different asset classes, you create a safety net, ensuring that a downturn in one doesn't drag your entire portfolio. And that's where gold shines. Its low correlation with other assets like stocks and bonds means that when the market throws a tantrum, gold often remains calm, even offering a safe haven for your hard-earned rupees. By embracing a long-term perspective and spreading your investments wisely, you can navigate the ever-changing market with confidence, ensuring your financial future glitters with success. Having said that, this is me, Ralison, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.